Research suggests Trump's tariffs, announced on April 2, 2025, likely contributed to gold prices rising above $3,100 an ounce by April 3, 2025, due to increased economic uncertainty. It seems likely that trade war fears and a weaker dollar drove investors to gold as a safe haven asset, with central banks also boosting demand. The evidence leans toward tariffs potentially reigniting inflation, making gold more attractive. Exact price impacts are complex and debated among economists. On April 2, 2025, President Trump introduced sweeping tariffs, including a 10% baseline on all U.S. imports and higher rates for countries like China at 34% and the EU at 20%, aiming to protect U.S. industries and reduce trade deficits. This Liberation Day plan, effective from April 5 and April 9, 2025, led to significant market reactions, with the S&P 500 losing $2.4 trillion in a day and the dollar weakening by 0.4%. Gold prices surged, hitting record highs around $3,167 an ounce on April 2, 2025, and maintaining strong levels by April 3, 2025, at approximately $3,114.17 per ounce. This rise is likely due to investors seeking safety amid trade war fears, potential inflation from higher import costs, and increased central bank purchases, such as China's significant gold reserves buildup. An unexpected factor is the role of central banks, with China accounting for 43% of global gold purchases in November 2024, potentially amplifying the price surge beyond typical investor behavior. This detailed analysis explores how President Trump's tariffs, announced on April 2, 2025, and effective from April 5 and April 9, 2025, have contributed to the recent surge in gold prices, reaching above $3,100 an ounce by April 3, 2025. The discussion includes comprehensive data and expert insights. On April 2, 2025, President Trump unveiled what he termed the Liberation Day tariff plan, marking a significant escalation in U.S. trade policy. This plan imposed a 10% baseline tariff on all U.S. imports, with escalated rates for specific trading partners: China at 34%, the European Union at 20%, Vietnam at 46%, and a 25% tariff on auto imports. The tariffs aim to protect domestic industries and reduce trade deficits, as reported by the New York Times. The announcement, published on April 2, 2025 at 1 p.m. PDT, led to immediate market reactions, with the S&P 500 experiencing a $2.4 trillion loss, the largest since 2020, and the dollar weakening by 0.4%, according to CNN Business. Published on April 2, 2025 at 7:49 p.m. PDT. Gold prices, traditionally a safe haven asset, saw significant gains following the tariff announcement. On April 2, 2025, spot gold was reported at $3,129.46 an ounce, with U.S. gold futures settling at $3,166.20, up 0.6%, as noted by Reuters. By April 3, 2025, prices reached a high of $3,167.62, with a current price of $3,109.76, according to Light Finance. though exact daily closing prices for April 1st and 3rd varied across sources, with macro trends indicating $3,114.17 on April 3rd. The surge in gold prices can be attributed to several factors linked to the tariffs. Tariffs, by increasing import costs, risk reigniting inflation and potentially triggering a recession, as warned by the IMF, which estimated a $1.4 trillion global economic cost per tax foundation.
Breaking news.
This uncertainty drives investors to gold, seen as a hedge against volatility, with historical patterns during trade wars supporting this, as noted by Investopedia. The $0.4% drop post-announcement made gold cheaper for international buyers, boosting demand as reported by Reuters. Central banks, particularly China, have been increasing gold reserves, with 43% of global purchases in November 2024, potentially amplifying the price surge as per Goldman Sachs. With the Federal Reserve hinting at rate cuts, gold's appeal as a non-yielding asset grows, especially amid inflation fears, as discussed by NPR. The tariffs are projected to raise the average tariff rate on all imports from 2.5% in 2024 to 18.8%, the highest since 1933, causing imports to fall by $900 billion in 2025, or 28%, and raising $1.8 trillion in revenue over a decade, shrinking U.S. GDP by 0.5%, according to Tax Foundation. This economic strain, coupled with retaliatory tariffs from Canada, China, and the EU, as reported by CNBC, heightens market volatility, pushing investors toward gold. Information was sourced from reputable outlets including Reuters, Bloomberg, Forbes, and NPR, with X posts also referenced for real-time market reactions. All data is current as of April 3, 2025, at 7:34 p.m. PDT, ensuring alignment with the latest market developments. In conclusion, Trump's tariffs have likely driven gold prices upward due to heightened economic uncertainty and safe haven demand, with central bank actions adding to the surge. However, this analysis, generated by AI as of April 3, 2025, is for informational purposes only and should not be considered financial advice. Consult a professional for investment decisions.